What's the best stock market strategy? This is the million dollar question asked by investors around the world. And in this video, I'll provide evidence and numbers to let you know what I think is the best strategy that anyone can do and will yield massive gains over time. Too many times, I hear investors say that they will wait for the price to drop before buying a stock, or wait for a pullback or dip. Some even claim to be able to time the market in order to buy at the bottoms. These are the wrong mindsets to have for long term success in investing. There's an article called Even God Couldn't Beat Dollar Cost Averaging. It compares two popular strategies and backs it up with numbers and calculations over two hypothetical investing scenarios over the last several years. Dollar cost averaging, which means you invest a set amount each month no matter what, versus buying the dips. As you can see in this chart, the author of the article assumed that the hypothetical investor would know exactly when to buy at the lows of the market, which is impossible. But even with that assumption, buying the dips underperforms dollar cost averaging 70% of the time, and it underperformed by 97% if the dips were missed by just 2 months. It only outperformed dollar cost averaging in the late 1920s and some of the 30s. But this was due to the 1929 stock market crash and Great Depression. Overall, dollar cost averaging resulted in the greatest overall returns. So if you attempt to build up cash and try to buy at the next bottom, you will likely be worse off than if you had bought every month. Because while you wait for the next dip, the market is likely going to keep rising and leave you behind. The dip may never come, and while you wait, you could miss out on months or even years of continued compound growth. In the last 5 years, Tesla's stock price has grown by an average of 69% per year. I'll save my comments on this one. ARK Invest's Innovation ETF, ARK-K, has grown by an average of 32% since it was created in 2014. Some people think that it's too risky to invest in single stocks, so this would be a great alternative. To be conservative, let's say it returns an average of 20% per year. If you don't think this is possible, just look at its past performance of over 30% and Tesla's of 69%. If you invest $200 per month for 30 years, you would end up with over $3 million. The best part is that you would only have deposited $72,000 and compound growth does the rest. I didn't even take into account that ARK-K pays a small dividend. If you do this for 40 years, you will end up with over $19 million and with only $96,000 of deposits, further illustrating the power of compounding over time. Everyone tries to make this complicated, but I've shown you research and numbers that prove it's much simpler than what most people think. Stop overanalyzing and overcomplicating it. Now that you know the strategy,
just do it! Don't let your dreams be dreams.
Thank you so much for taking the time out of your busy day to watch this video. Please leave a comment below, like the video, and subscribe if you like what you see.